Good afternoon, everybody. It's Sunday, 12 p.m., October 25th. I got Faisal on the call here with me. We are the Alpha Trades community. We do a lot of crypto-centric analysis, trade setups, and same thing on the equity side. Unfortunately, we do not provide investment advice. So if you're looking towards our community to provide you buy and sell signals, we are not that. We're simply showing you exactly how we look at the market, how we analyze the market, and today I have Faisal, who is our equities analyst, who provides a daily breakdown for our Advantage members. Advantage is just the terminology that we have for people who are paying members in our community. And you can see right here, we have the Advantage membership, where you can buy this membership and pay $97 per month. And you could get access to all these lock channels that you see. We don't have tiers. So for $97 a month, you get access to all things related to crypto and all things related to equities and options trading, where Faisal is heavily involved in. So today we're going to do a Sunday breakdown of markets. We're going to be talking about the US. We're going to be talking about China. We're going to be talking about Tesla, Kathy Wood, who is the ARK Invest CEO, and many other things related to the stock market. So if you have any questions, anything else you want to talk about, anything else you want us to cover, leave us a comment, leave us a thumbs up below in the YouTube video that you're watching. So with that being said, welcome, Faisal.
Great to be here, man. How are you doing?
Fantastic. It's been a pretty good week in both crypto and I guess a more of a flat week in U.S. equities. So that's why I got you here to talk about some things.
Yeah, it was a really interesting week because well, first of all, let me go ahead and get down. Yeah, it was a flat week, but it was pretty much flat because you had on, I think since the start of the week, I think Tuesday was the big day where we got the first leg of selling in a lot of the high growth names. So Peloton, Okta, I think Tesla also sold off. It was a really bad week for high growth assets in general. And you could take a look at ARKK, which is, it's funny you bring up Kathy Woods. That's, I think, the main ARK ETF. That one, I think, sold off 3.5% this week. On a week where the S&P closed, I believe, flat, a little bit to the downside, but RSP, which is the equal weighted ETF that I watched, just to give a broad picture, actually closed up 0.66%. So it had a nice week. And that kind of indicates to me that the majority of stocks actually went up throughout the week. So it was
What
mixed.
exactly, what exactly, can you explain RSP real quick?
RSP is like an equal weighted ETF of the S&P. So, when you look at the S&P index, the SPX or whatever you do, it's all weighted differently. Like you could have, for instance, JP Morgan be weighted 5% and Apple be weighted 16% or something. And so it could really give a skewed conception of breadth in the market, because you could have one stock that's doing fantastic and the other one's doing bad. But if that one fantastic stock weighs a lot more, then it obviously looks much better than the broad picture. So
So,
RSP is an equal weighted ETF that has every individual stock in the S&P index, but weights them entirely equal. So it's
yeah,
not skewed.
got it. So you're saying that RSP actually gave us a slightly more positive look versus the SPX.
Yeah, I think, and it's a pure characteristic of this week where you had a lot of the high growth names, even the tech names like Apple, Amazon did bad this week. Even after the amazing news that it had on its Prime Day. I think it made like $3.5 billion. That stock has really been bad lately, and so
Mhm.
you had those big stocks way down the market, but you had value sectors, bailout companies like RCL, Royal Caribbean, I think went up 10% this week. Delta Airlines went up more than 8%. Southwest Airlines went up 8%. Marriott Vacations went up more than 8%. You had a lot of these stocks that had been beaten down for a long time have one of their best weeks in a while. At the same time, you had these high growth names have one of their worst weeks.
So what is this telling? What is this telling you exactly? Where you see Love and RCL and all these different names, which are considered bailout stocks, to start going up? Is that giving you some signal, some trigger, any indication that you're getting from the market that's different now?
Yeah, this is where it gets interesting because this is just one week. And I've been trading this market actively, very consistently throughout this entire recovery cycle, and we have seen these stocks give performances like this. They've had these good weeks where high growth has kind of stalled or even come down. This week, we saw a complete inverse relation between these beaten down stocks and the high growth stocks. So I don't. You could make the case that it is some sort of rotation, money moving out of the high growth extended assets and into the more deep value or bailout names. Energy and financials are two sectors that also did well. They didn't do as well as these bailout stocks, but JP Morgan went up 2.5%, and I think energy was a little bit flat. But for the most part, you could make the case that it's a rotation, or it could be the market discounting a vaccine or different things like that. At this point, it's really unclear. I definitely want to see one more week of gains and data before I make any assumption. But I mean, it's positive nonetheless.
It's really interesting to see that bailout stocks, are doing slightly better than financials. I mean, financials have been just getting pummeled for the last, several months now. I know you've been talking a lot about Morgan Stanley being one of the leaders in the financial space, but what's your take on financials right now? Do you think that they're ever going to see a rotation, or not ever, but rather the way they look right now? I mean, what's your take on that?
Well, I mean, just based on this last week, they had a nice week, but they definitely have to prove more. I will say that the fact that interest rates have actually gone up a lot in the past week or 2 weeks has really helped push some money into these names. Usually, there is a correlation between rising interest rates and the short term momentum of these financials. So it they have some good stuff going for them, but once again, it's just too early to call a full-on rotation, like a full-on now is the time to buy these stocks because once again, there's still a lot of inherent risk with these companies. Like we're still dealing with COVID, we're still dealing with um, hard stress on the small business economy, which of course these financials are insanely tied to. Same thing with the energy business. There's a lot of constraint there, and these banks are tied to that as well. So the risks are still on, but once again, this may be. I'm not going to rule out that this could be a time where you buy when things look the darkest, because once again, there is light over the horizon in that the vaccine should be coming out early next year. At least that's what's expected.
Yeah, and I'm glad you kind of brought up financials in respect to rates, because to explain to our viewers the reason why we have interest rates having a direct correlation, if you will, on the movement of financials is because this all has to kind of do with what's happening with the central bank, financial intervention that we've had in the U.S. Now, understanding that central bank intervention has kind of taken the front role, or rather, the lender of first resort rather than the lender of last resort, which was the point of a central bank. It has caused devastating effects to the financial sector, because now what you see is indicative in M2, which is let's look at money M2V. This is basically the movement of money, right? Velocity of money. So the reason why we see this M2 collapsing is because, and again, this is from a macro perspective, is because banks themselves are now a little bit more tighter in the restrictions of how they want to loan out money or give out money for businesses. Because remember, the Fed has kind of stepped in and said, hey, we're going to start providing stimulus and money for these struggling small, medium sized enterprises or corporations. And same thing with people. So the role of banks has kind of come down a little bit. And this is why you see direct correlation with bank stocks going down, M2 velocity going down. But then now you're starting to see that shift where interest rates might start coming up. And this is where banks might start coming up. Just something that I wanted to mention. So where, personally, if you are right regarding, things related to banks, which is that, okay, if interest rates are coming up, that means banks might now start going back into their role, which is becoming the lenders, becoming the institutions that they're supposed to be, rather than the Fed intervening in that. But my question to you is, how long is that going to last? And do you think that this whole talk of stimulus is once again going to put banks and financials on the back burner, and once again, put the Fed in the front seat?
I mean, that's a really good question. I wish I was smart enough to know, but like I said, that you're exactly right on the fact that the Fed has kind of stepped in to be that what the banks were supposed to be, and that diminishes their value in general, and could hinder their value in the future. I have no idea, honestly. I wish I knew, but bottom line, just when you lay out all the risks, I think one can assume that if you're looking for a bargain basement deal on these companies, I don't think this is it. I think they have to get a little bit cheaper for exactly some of the reasons that you said. There's still a lot of risks on the table that could affect these stocks. So even if interest rates go up a little bit because the economy is looking brighter, or it's kind of factoring in a vaccine coming soon, I think just exactly what you laid out, those risks will be persistent even after we do get something like the vaccine. So I think sure these stocks could come up to the top end of their ranges, but I don't think they're going to come back to their pre-COVID highs anytime soon.
Great point. Um, the other point that you mentioned, going along with what we're dealing with, which is still the coronavirus pandemic, right? The US economy is, in general, for the most part, not doing anywhere close to the levels at which we were at pre corona. Now, one could also make the argument that we're not really going into the proper recovery direction. Yes, we're improving, but we still have a decently high unemployment rate. A lot of small businesses, medium sized businesses are still struggling. Now, I want to square that off with things happening in China. We had a conversation, privately, that there are some signs of hope and potentially optimism that are coming out of China. Now, do you think that the U.S. is on the same path of recovery, or do you think that at present moment, China is doing significantly better and U.S. is kind of a laggard? Like, how are you looking at that situation?
Well, I'm not like a deep economist, so I can't speak for the fact that one economy is going to be doing better than the other within the next 2 to 3 years, especially since things are so in such disarray. But I will speak on the fact that China's ability to get back on track, at least to manufacturing levels before pre-COVID, and get everything back in order, at least the supply chains more stabilized. Uh, their their ability to do that is should not be discounted, and I think it makes them uh if the US continues to struggle with COVID, and small businesses continue to keep needing low interest rates and stimulus, and we get too much hindrance on that, yeah, China, I think, could be a better play. I don't even know if I want to say a better play, because the US still has technological dominance, and as long as they have that, I think you can always bet to some degree on the US. But
Yeah.
I like China. That's all I can say about that.
Right. No, I definitely don't want into. I don't want to get into the politics of the China camp versus the U.S. camp, because that's not what we're about. Our community is generally focused on providing the most sound analysis for where people could look forward to stocks and where exactly the money flows are going, and where people could look forward to potentially making money. Right. And again, we
Mhm.
can't provide financial advice, but the best thing we can do is show you that China has clearly recovered much better than other countries, especially the US. Now, within that recovery, China accounts for about 30% of global GDP. Um, Within that recovery, we can, of course, look at some Chinese stocks that our viewers should be paying attention to. So I know you are quite informed, I would say, in the Chinese stocks. So what are some stocks that people should be looking out to look at China potentially leading this recovery and how they can play that recovery?
I wouldn't say I'm a China expert, but I definitely have some experience with the Chinese internet stocks and the tech stocks. Those are the ones that I've kept an eye out on, most of the time, because I think there's a lot of inherent risk just dealing with the normal Chinese company that's not as transparent. But stocks like Alibaba, JD, the big ones. PDD is also another e-commerce play that's risen up quite a lot this year. EDU is a very interesting online educational company in China. I mean, the growth looks phenomenal. Yeah, the first one. I mean, the growth looks phenomenal. Everything, just I think COVID has enhanced that need to go online. and get online education. I'm sorry, I can't speak for the product. I haven't used it. I'm not in China, but at least from a numbers standpoint, it looks very interesting. And definitely with the backdrop of COVID, this is one that I would keep an eye out on. It's gone up a lot, but the trends. If the trends continue to push things in the right direction, it could definitely go up higher. Another stock that I would look, Yum China. I like Yum brands in general as a value play, but take a look at Yum China and see how much it's gone up, and then take a look at Yum brands, just the regular stock Yum. So Yum China is Yum Brand's pure China spinoff, and look at the disparity between the performances between Yum China and Yum Brands, which is I don't know if it's just American holdings. It could be international, but definitely America is the heaviest weight. And just look at that. I mean, Yum Brands in America has yet to make an all-time high, and here in Yum Brands China, you're clearly seeing not only a complete recovery of pre-COVID highs, but they've managed to make all-time high as early as last month. So that should give you a clear indication of the disparity between how the Chinese market is doing, and this is a very big consumer stock in China, and just how the U.S. is doing. This is just a small comparison that should tell you that. So I'm still very high on China in general, but I prefer to kind of stick with the internet plays that I just mentioned. But once again, you can look at these types of relations to give you a picture that okay, things are doing much better in China than they are over here.
Yeah, and those are some solid points. Looking at Yum China, JD, Baba, PDD, EDU. So make sure those of you who are watching right now note down those tickers. Do your own research. Consult your financial advisor.
Oh, last one I want to say ZTO. This one is a little bit sketchy. I think they have an office in the Caymans or something. That's where the headquarters is. I don't know. Yeah, a little bit sketchy or something like that. But they are one of the biggest logistics companies in the world. Alibaba is one of their huge partners, so they pretty much are the UPS for Alibaba. And I don't know about JD, but definitely Alibaba. This is one to keep an eye out on. I put out an alert Friday, I believe, and so if you're very big on e-commerce, this is just a natural way to play that side through the logistics part.
Yeah, and some of the other ones that I pay attention to, which I know you do as well, is KWeb and
Yes.
CHIQ, which I was telling you about. This is the Chinese Consumer Discretionary ETF, and you could see, I mean,
Yeah.
God damn, like it has.
Damn.
I know. So just some things for our viewers to pay attention to, like if you are not overly political and you really just want to focus on making money, these are the tickers that you want to be focusing on, to keep an eye on all things related to China in terms of their market. Okay,
Yeah.
let's dial back and let's move it back to the US. What are things on your horizon for going into the week ahead?
Just to continue, just to see if we get that continuation of the inverse relation between value bailout stocks and high growth stocks. Personally, I put out a ton of alerts Friday. It was the first time that I felt comfortable buying and going long again. I covered my Tesla short as well. I just felt like things were a little bit too short term oversold on the high growth side, and things seemed to be stalling on the value side, which is why I wanted to see another week of performances just to negate that fear. But for the most part, I actually think you're going to see high growth stocks and tech stocks bounce back well from here, and I think once again, I think we'll get more data come Monday, but definitely by late Monday, we should figure out whether or not that inverse relation will hold up. Because I really think Friday was a really good day to pick up stocks. Like I think I talked about in the last video, Restoration Hardware, ASML, I even Fastly. I think Fastly, damn, that downgrade really made me like it even more. And I think the hate has gotten too much. And at a time when most high growth stocks are this oversold, I think it's worth taking a shot on. But
Yeah,
that's just my opinion.
right, for sure. No, these are great points because after you mentioned that Fastly sell off, I actually just put some alerts on it and I just said, okay, I'm gonna watch this thing and see if it could come down to this low. And literally, as I'm watching this right now, I'm saying, okay, now I want to see this low being defended, and if it can, shoot, I mean, I should be targeting, to the top of this range at some point if this low holds. Um, so just something to pay attention to for our viewers. The other thing that you mentioned, your stock alerts. Again, this is a perk that the Advantage members have. You put all your analysis in here, right here for Advantage members, and then the stock alerts right here. And then you're pretty active in the stock market chat. So if you have any questions for Faisal, you can ask them right here, tag him or myself. And this is the kind of information that you get with the Advantage membership, like we said earlier. Moving on, right? I'm actually long in Tesla, and I want to talk about Tesla a little bit more because we were having this conversation about electric vehicles potentially being in a bubble. First of all, do you agree with that?
Yeah, I think I don't know about a bubble, but they're definitely the most extended asset in this market. I don't know if you can make a case for it. Any, they're definitely not the high growth software stocks. They are in a class above their own in terms of overvaluation and extension for sure.
Yeah. And the reason I want to ask that is because at present moment, I'm still looking at this market having the more macro like risk on nature. And just to expand upon that, we spoke about stimulus. More than likely, the chances are it's going to get passed. It's really not a question of if it's going to get passed, it's rather when and how much. And if we're kind of taking that statement and we're saying, okay, we'll run with that notion that likely stimulus is going to be passed, within electric vehicles, there's not really a whole lot of options other than NIO in China. But in the US, there's not really a whole lot of options other than Tesla, where I see that, these kinds of valuations taking a further stride up. And do you agree with that?
I thought you were a Nikola fanboy. Am I? Isn't that correct?
Oh gosh. No, man, I took an amazing short. I think I told you about Nikola, but I haven't touched it since.
Yeah, I know. Yeah, no, I was just kidding with you. I know you've been hating on this stock for a long time. No, I think these stocks are, you know, I, like obviously the future is great, and I think the fact that the odds for Democrats looking like a complete sweep really helps the optimism within this sector in general. The fact that they can adopt it a lot easier in much bigger sectors of the economy or the government itself. There's a lot of reasons to like electric vehicles, and that is the future. But once again, I think if everyone, like just in the back of my mind, if everyone is trying to go electric at the same time, I really think there's going to be huge problems as far as lithium demand, unless there's some source out there that has not been uncovered, whether it's on the Earth or interplanetary, something like that. Lithium, I think, will be a very key problem, and at some point, I think a lot of these companies that are betting on this growth within the next 5 years, we're going to be this profitable within 5 years. I think those numbers, you cannot make a 5 year assumption on those numbers because the demand for the core product, which is lithium, is so high that the supply, I have to assume, is going to be shaken up drastically. So once again, there's a lot to like about these stocks, but I really think there's a lot of inherent risk on the rise, especially as more players come into market and more excitement comes into this space.
That is a great point that you brought up about lithium because when I was in Colombia, there was news coming out, about Bolivia, which again I think accounts for like 1/3 of the world's lithium in its own reserves. Okay,
Wow,
it is
really?
it is insane the amount of lithium reserves that they have. So the news that we heard from say a Colombian or South American standpoint was that, and again I don't know if this is true. I'm not trying to get sued or anything. So this is just all hearsay. Um, the news that we were hearing, on the web or from these expat groups that I was a part of was that U.S. government and these electric vehicles company were going to somehow trying to bring down the government of Bolivia and install, sort of like a puppet, or somehow trying to figure out how they can get access to these massive lithium mines in Bolivia. So one thing that our viewers need to keep in mind: number one, pay attention to lithium as a commodity. There are ETFs out there, and I'm going to list them out for our Advantage viewers after. But pay attention to lithium as a commodity, because if you believe in electric vehicles, this is literally the one source, the resource that you need to be paying attention to. So you do not necessarily have to play the EV model or as a stock, you can just play lithium as a commodity. Okay. So anyway, just something interesting because not a lot of people talk about this, right? Who would have thunk it that freaking Bolivia holds, one of the largest reserves of lithium in the world, and you can play lithium as a commodity versus the EV stocks.
Yeah, I had no idea about the Bolivia thing. That's insane. Just to touch on how to play lithium, I've mentioned this plenty of times before, but I like ALB um, as far as being. I think they're the world's biggest lithium miner.
Mhm.
So that's just kind of like a common sense play to me if you want to have some direct exposure to lithium, but without actually buying the commodity or anything like that.
Yeah. I mean, the one in South America, I think, is was it? Li- Yeah, I think lithium. There we go. So this is another one that I was generally paying attention to. Again, this is from the standpoint of what the Colombians and South Americans were talking about. And maybe this one. Okay, this is not a ticker available, but yeah, just ALB and LAC. These are the ones that maybe our viewers can pay attention to. Um, what else you got to talk about, Faso? What else is on your plate?
Um, you know, well, we got a big week coming up for earnings. Like there were a ton of earnings reporting this week. I'm talking Boeing, Microsoft, just on the whole spectrum of earnings. I don't think we've covered that whole risk in the future, so or that whole risk for this week. So I'll go ahead and just lay it out now. Bottom line, just with all of these earnings. So one thing I want to touch on is even though it's been a very rough 2 weeks, the beat rate for all the companies that have reported, I think 27% of the S&P has reported, and the beat rate is 81%, which
Yeah, you
means
just
81% of these companies have beaten earnings expectations, which is historically high.
right.
Uh, it's been such a crazy week because when you have that historic beat, but then again, you in the past 2 weeks, it's really not amounted to any type of leadership or any type of breakouts. That gives cause for concern. So, just for earnings in general this week, the main thing you want to look for is positive reactions because even if a company reports well, like Lamb or LRCX or Tesla, they're still susceptible to more selling even after they report. So bottom line, you want to see just on the headline say, hey, this was a good report or something. Just keep it simple. If they beat on earnings, current quarter earnings and future guidance, that's just flat line. That's a good report. Just wait and see what the reaction is. If it's negative, and it could be a shared experience where Microsoft this week could report well and still sell off. Boeing could sell out or report good and sell off. It's not necessarily industry specific, but it's all about the reactions because that's the biggest risk I see right now that could derail this market is just the fact that it's a sell on the news type earnings quarter.
I think, yeah, I think that's a great point, and I feel like this is a good positive note to leave it at because we've provided a good amount of actionable information. Some Chinese stocks to pay attention to, the earning stocks that people should be looking out for the week ahead. Tesla, I'm long Tesla, by the way, just full disclosure, and of course all the other information that we've provided. I think if there's nothing else, Faisal, we can wrap it up here.
Let's wrap it up.
All right. Sounds good. Thank you, everyone, for listening to our content and our video. Again, we do not provide financial advice. Hit the thumbs up, leave us a comment of your thoughts, and join Advantage membership. Like I said, 97 per month gives you access to everything, all crypto things related, and of course, all equities related. Cheers. Have a good rest of your weekend, and we'll talk to you next weekend.
Peace.